Hi, folks. Dan Bird here. Midweek, Thursday, May 16th. Haven't talked to everyone in a while. I was away last weekend, and then I didn't speak with Zuber the weekend before that. So hopefully this Sunday we can get together. But I just wanted to do a quick update on what I'm seeing in the market, and hopefully everybody has seen that the market has rallied nicely. And question is, will it continue? So let me share my screen. This will be a quick one tonight. It's market's closed. It's about 5:15 on the East Coast right now. So first off, if you're interested in getting my newsletter, just go to breakpointtrading.net. And right here, this little button, newsletter is available. It's for free. So just click on that and you'll get the newsletter. I'll click on it and show you. There's some interesting cartoons. This one is, yeah, 510. So we had the CPI report. Last week when I posted this, they did not have a forecast, but the forecast actually ended up being 3.4%. And interestingly, that's exactly what I said last week. Does not yet have a forecast. I think there's a good chance it will come in below last month's 3.5, perhaps around 3.4. That's exactly what it came in at, 3.4. So inflation was a little bit tamer. The market liked that. So market rallied nicely. This is the reason why. And I explained all this in last week's newsletter. This is the 12-month window. So this one here is the one that dropped off. Every time a large one drops off, that helps the current one. And that's what happened this time, in addition to commodities. Now, the next one in June has a very small one, which is actually not going to help CPI. And actually, I thought it might even come in hotter than expected. But I've kind of changed my mind on that. I think it may not come in hotter. And this is one of the reasons commodities are coming down dramatically. I'll show you what the current one looks like, but this is from last week. And you can see these are all of the holdings: gasoline, diesel, natural gas, sugar, food, etc. That one is declining. Gasoline, oil is declining. So what's highlighted here is the one that we just got, the CPI report that we just got. So this is one of the reasons I thought it might come in a little bit better, in addition to this right here. Commodities had gone up in the beginning of the month, but then came back down, and they were basically flat. Gas and oil, though, actually were lower. But the next one that we get in June is going to be for this next section right here. And I'll actually go on my website to the CPI report right down here. Here's CPI headline. Again, you can see there's a small one that's going to drop off next month. But more importantly, if we look at commodities, which are right here. So now this next month, the one in June, will account for this highlighted area right here, the May period. And as you can see, other than copper seems to be continuing higher, which actually is a sign that the economy is doing well. But everything else, food, which is mostly cocoa and coffee, that's dropping off a cliff. CRB, which is all these things, includes metals, energy, and agriculture, that's falling. Gasoline and oil are falling. So if that continues into the end of the month, the end of May, we're right in the middle right now, then that will actually be good for the CPI report. Even though there's a small one that drops off, the commodities might actually help. So interestingly, the next CPI report is on June 12th, and that's the same day as the Fed meeting. So the report will be in the morning and the Fed meeting will be in the afternoon. I expect that if we get a tamer CPI report again, it won't be dramatically lower, I don't think, but I think it will be trending downward. So maybe 3.3, maybe 3.2, something like that. But it will be enough for the Fed to say we're not going to raise. I was actually worried about that, but I'm not as worried anymore because of this. So I think they will continue to hold. And the first cut, People are talking about September, but September is before the election. So I think it might actually be in December, might be the end of the year. But we'll see how everything else pans out, especially unemployment. And unemployment is one of the important ones that I'm watching on the recession watch right here. Unemployment rate ticked up a little bit to 3.9. If it hits, I've heard people say 4, but I think it needs to get above 4. I think it actually needs to get to about 4.2. If it gets to 4.2 in that time frame, let's say by September, then the Fed could start cutting then. I don't think they like to cut before the election, but this is the one to watch. The unemployment rate is the one to watch. So the one in June might tick up to 4 or somewhere in that neighborhood. And if it continues up to 4.2, then September, there could be a cut. So this is the one to watch. Let's take a look. The other thing I wanted to show you guys is on my website, I do something called a market bias matrix, which essentially divides the market up into the indexes, the sectors, the industry groups, intermarket relationships, commodities, metals, and currencies. And I update this every day. And anything that's bold, highlighted with a big box around it, that means it just changed. So today, these are the ones that change from bear to bull. And there you can see there are no changes to the bear side today. So everything is very bullish, and you can see how much green there is on here. Now, the last time we talked, which was about 2 weeks ago, this middle column, which is the medium-term trend, this was almost all red. And the short-term trend had just begun changing from red to green. And if you look over here, this actually charts all of this stuff. And you can actually see what the chart looks like. This blue one right here, you can see we dropped off a cliff. And you can see how everything here was turning red. In fact, if we looked at this during this period right here, everything here was red. The middle column was almost all red. The short term, the left-hand column was almost all red. We dropped off a cliff, and this right here is May the 2nd. The bottom right there, May the 2nd. So May the 2nd, May the 3rd, and May the 6th, which is when most of the signals started to turn bullish right there. But this one actually changed on May the 3rd. It was May the 2nd, it was actually hit the bottom. And then May the 3rd, it started to creep back up. And then May the 6th, which was a Monday, it really took off. And that's when all of the bullish signals came in, including the market timing signal that I'll show you here in a second. But the other thing that happened was all of these short-term, this left-hand column all started to change from red to green. And in the last week or so, this middle column has now started to all change from red to green. And if you track this on a daily basis and watch this, you would actually see the market changing as all of this started to turn green. Of course, it slowed down a little bit because everything is almost green already. One thing that you'll notice is that the long term is kind of flattened out. So that's typically what happens is the short term will cross, which is the orange line. It'll cross below the medium term and the long term. And then it will start to go back up. It will be the first one to go back up. It'll turn green first. And then the medium term will turn green, so you can see where it crossed. And both of those are heading back up to the long term. When it gets back up here, then everything starts to flatten out. And then we'll see if we can, how long we can hold it. What I think, this is my opinion, doesn't mean that this has to happen. Anything could happen. Things could change. But my opinion is that we will probably be in a bullish stance. Right now, we actually have hit. This is VectorVest. You can see right here on VectorVest, today we actually hit this resistance line, had a really nice uptrend, hit the resistance, and today gave back some. And for those folks that are watching the market, you probably saw that as well. We gave it back a little bit today. We'll see if that has any meaning. Because of that resistance, I expect that to happen and for it to come back down before it starts moving back up again. So that's probably what's going to happen. But I think in general, we're going to essentially trend higher into June. June, we will get another reasonable lower CPI report, and the market, I think, will then continue to go higher until we get to the election and the conventions, which will be sometime in mid-July. So we probably will trend higher till mid-July, and then we'll get choppy and probably trend back down again until after the election, and then take off. So let's take a look at on the charts page to highlight where we are right now. I'm going to use the Santa Rally chart for 2024 because it gives you a really good view of what the trend looks like. Now, a couple of weeks ago, I put in this resistance area, so the market pulled back. I said back then that we probably will get a pullback of about 3 to 5%. We ended up getting 5.5, roughly 5.5%. And then we started to rally a little bit, and I said that this area here is resistance right below the 50-day moving average and the 21-day. So we hit that, we pull back again, we went up and we hit it right on, in fact, this is May 2nd. That's the day that I showed you on my chart that I update every day. So there's May 2nd, there's May the 3rd, and a lot of folks were saying, well, the 50-day moving average is going to be resistance again. And that's where the market will hit there and turn around and start to head lower, and we'll get a big sell-off, probably back to the support level back here. I didn't think that was going to happen. I thought we were going to push through it. And the reason is that both of these candles are very bullish. You can see that the market tried to sell, market's selling off here, sold off here, right there, sold off during the day and came back at the end. The next day, May 3rd, had a really nice gap up, but sold off during the day, but ended right back at the high again, right at the 50-day. And that's why I thought we would push through it, and that's what we did. Not only did we push through it, the 50-day, but we also exceeded the resistance level back here, which was the all-time high, and yesterday made new all-time highs. Now, anytime that happens, the market has to rest, has to take a break and pull back, and it probably will pull back some more as well. 5250 is where that support line is now. That was clear resistance because it was an all-time high. We broke through it, and we probably will come back to this 5-day moving average, the pink line, and the 5250 level before we see what the market's going to do. I think it probably is going to continue higher all the way through June and probably into July. That's my opinion. Doesn't mean it has to happen. Some of the new things that I just added recently, business cycles and sectors. I put in a chart here that has the aggressive sectors on the left and the defensive sectors on the right. And this is a 4-month, so it encompasses the previous quarter. And this will give you a sense for which sectors are overperforming or underperforming. And you can see with the aggressive sectors, industrials have been doing really well, communication, which is internet, XLB is where gold is, and technology. Discretionary, though, has been lagging, and that it actually is concerning me a little bit. On the defensive side, and the gray, by the way, the gray area is the S&P, so you can see which ones are outperforming the S&P. On the right-hand side is the defensive sectors, and one thing that should stand out with this is there's really good breadth across the market. Not only are the aggressive sectors doing well, outperforming the S&P, but also some of the defensive sectors like energy, utilities, and financials. Even staples and healthcare are moving up as well. So it's a very broad rally that we've had recently. And just for interest, this just shows you the market versus the economy and shows you which sectors do well during those periods. But this one will be updated once a week, so you'll continue to see how that's doing. If I go back to the charts area, and I'll show you what concerns me, especially with discretionary versus staples, and that's this relative chart right here. So you can see discretionary versus staples. If this is trending lower, that means discretionary, which is an aggressive sector, and things that we would like to buy, like new cars and TVs and things like that, versus staples, which are things that we have to buy. Like toilet paper and soap. So you can see the weightings, Amazon is 22%, Tesla's 20%. That might be a little lower now. Actually, Tesla has not been doing well. And then over here under staples, Procter and Gamble, Costco, which is done well, Pepsi, Coca-Cola, and Walmart. Walmart had good earnings also. So staples is actually outperforming discretionary, which is normally defensive. You normally see that happening when the market is getting ready to decline. However, there seems to be pretty good breadth in the market. So things on all the sectors are actually going up. But this one is one that does concern me a little bit. And the other one to watch is the Qs, which has also been underperforming. So you can see the Q versus S&P. So technology versus the S&P, even though the Qs are moving higher, they're underperforming the S&P. Again, not something that you want to see. And this is the equal weighted down here, which is even more apparent. So the NASDAQ is underperforming, equal weighted is underperforming the S&P. You like to see that the technology sector outperforming in most cases. And then finally, mid cap versus small caps right here is actually just moving sideways. So you can see the Qs, technology and Russell 2000 basically are kind of tracking along with each other. And large, small, mid and small caps down here versus, this is growth versus value. So growth versus value is, for large caps, is hanging in there, but for mid and small caps, growth or value rather is outperforming. So growth is underperforming. Again, that's something that you don't want to see when you get near a top. That sometimes implies that the market might be running out of steam. So just some things to be aware of and keep track of over time. I also added a dollar, gold, and silver and Bitcoin. So you can see Bitcoin is significantly outperforming. Copper has been outperforming lately. Gold and silver. Silver is actually outperforming gold right now. So that's a good thing for silver. So that's about it. I think everything in general looks really good. The VIX is ridiculously low once again. It was creeping up through the first part of this year. And after getting above 20 very briefly, just for one day, it's way, way down again. So not much volatility going on. That's actually good for the market. The momentum for the VIX is falling off and bullish percent index is rising. So all of these things are bullish. One of the other reasons why I think the market has a good chance of continuing higher in end of May and into June. This Sunday, I'm going to talk about the old saying, sell in May and go away, and whether that has any merit or not. So stay tuned on our show on Sunday. Okay, so that's pretty much it. One last thing, and I talked about this for those that are subscribers to the website. All of this content here is for subscribers. But those that are subscribers, I do a monthly Zoom meeting, and I record it and post it here. So last week, actually the week before last, I did something on options as well as a paper trading worksheet that I talked about. And this is the paper trading worksheet. It's just a way to track things, as Mr. Zuber recommends for those in real estate. Figure out a buy box, figure out, get to know that buy box, know what an average price is, so you can recognize a deal when you see it, and just spend 20 or 30 minutes a day looking at your market without necessarily doing anything in the beginning. And this paper trading worksheet is kind of the same thing for stocks. So it helps you understand how to use scans, understands how to look at the charts to help you to know whether you're seeing the right things. And what this is I just started to use some of the scans that I typically use and identifying candidates. I put them in here, and then I put little notes over here. So this is earnings after the market, before the market open. If it's red, this changes automatically. So when I put the the scan date in here and I put the earnings date here. If it's less than 21 days, then it turns red. And as you can see down here, the only one that has sold out so far is this AMD trade. Downtrend reversal is how I found it, but I found it the day before earnings. And I put a note here, entry just before earnings, very risky. Then they came out with earnings and the stock dropped and the stop price was taken out at 146. So that was a 9% loss. But then look what happened. Up here, a different scan. This just happened a couple of days ago. AMD showed up on that scan once again. This time, though, earnings are 77 days away. So there's quite a bit more time left. And if we actually look at this chart for AMD, you can see right here, I circled the reason for the scan. And it's been moving up, pull back today along with the rest of the market. But a lot of the other indicators, momentum indicators, are just starting to turn positive. So right now, the stop price has actually moved up some, and it's only 3%. So if it gets stopped out, it's only a 3% loss. But you can notice some of these other ones, like right here, IESC, that was only 3 days before earnings. So again, I said before the market opened, just before earnings, very risky. But in this case, they had great earnings and the stock took off. So the buy point was right back here. Stock gapped up for earnings. And you can see I'm moving my stop up. Right now, I've got the stop at this support level. And that's where I'll keep it unless it gets taken out. And today it sold off, had a nice rally in the beginning and sold off along with the rest of the market. So we'll see if it comes down and gets taken out right there. But in this case, if that does happen, it will be a 16% gain. So I'm good with that. 16% gain in what, a couple of weeks, basically. And so the same thing, I just track all the trades in here. It helps me to understand what I'm using for scans, whether those scans are working or not. You can see if the trade ends up being a loss, then the scan turns red over here. If there's a gain like this one here will be, no matter what happens, if it stops out, it's going to be a gain, then this will turn green. And over time, I'll start to see which scans are working better than others. In addition, it helps me to understand what the charts look like. So this one here, 7 days before earnings. So again, it was very risky. But right now, if it gets stopped out, it will be a 7% gain. But it helps me to know, whether or not I'm reading the charts correctly. So you can see right here, this was a downtrend reversal. That's what the circle means. This was the buy point right here. Right now, the stop is up here, which is right at both the 50-day and the 21-day moving average. So that's a really good place for a stop. So if it does come down and get stopped out, then I've got a 7% gain. But if it doesn't, then it will just continue higher, and I'm good with that. But this helps me to know whether I am reading the charts correctly, whether I'm setting my stops correctly, how to set the stops, and I can put notes in here so I can go back and see what I've done and how things have gone. So this paper trade worksheet I actually put in the website. It is on this page right here. So this is the Zoom meeting I did for subscribers a couple of weeks ago. And there's the spreadsheet. So anyone that's a subscriber can download that. That's something that I will continue to do, on a regular basis. And all of this can be found in the website. So that's it. If you, by the way, Investors Business Daily just changed yesterday to a market in confirmed uptrend. So they recommend raising exposure to 80 to 100%. So anytime IBD changes, this updates automatically. There's no need for a paid subscription to get to the main page, the home page. Home page is available to anybody. And on that page are charts for the S&P and the NASDAQ, as well as Bitcoin. If we look at Bitcoin right now, we can see that it's trying to rally, but it's still in this downtrend channel. You can see the channel right there. So it's trying to rally up. It's right at the 50-day moving average. Sold off with the rest of the market today. We'll see if that can break out above that channel line. And By the way, I also put a chart for Bitcoin on the website too. And I actually talked about that a couple of weeks ago. So there's a chart for the S&P. And then finally, the secular bull market chart is always on the main page. You can see that there's still room to run before we hit this this resistance line up here. So the market can still go higher. I'll talk about that Sunday when we talk about the old adage of sell in May and go away, whether it has any validity. All right. Anyway, thanks for listening. Hope everyone's doing well, and good luck trading. Take care.